Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. During this presentation, we welcome Augmedix, ticker symbol of AUGX, that is Alpha Uniform Golf X-Ray on the NASDAQ Stock Exchange, and its Chief Executive Officer and Board Member, Manny, Krakaris. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents. We will dive into a discussion in a moment, but for one final item, I want to remind everybody that Augmedix is available for one-on-one meetings later this week. If you have not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/ and click the one-on-one meeting request button. With that said, let's begin. Manny, it's all yours.
Great, thanks, Adam. I'm going to go ahead and share my screen. Can you see that now?
I can, yes.
Terrific. Okay, well, let's just dive right into it. So as Adam mentioned, my name is Manny Krakaris. I'm the CEO of Augmedix. I joined the company about 4 years ago now, and joined the company primarily because I felt that there was a massive opportunity in front of us, and one that was grossly underserved by existing solutions at the time, and felt we had an opportunity to really disrupt this space. I'm joined by our Chief Financial Officer, Paul Ginocchio, who previous to joining us in June of 2020, had a long and distinguished career as an equity research analyst at Deutsche Bank. So let me just give you a high-level view of what we're all about. We provide virtual medical documentation for the healthcare industry, which currently consumes about 1/3 of a doctor's day every day. We've developed some proprietary software to automate the note creation process. We offer the broadest suite of services and can accommodate the widest range of clinician workflows in the industry. And our solutions allow doctors to focus on what matters the most, which is patient care. Some mega trends are providing tailwinds for our business. There's 3 in particular that are really helping things out. First, COVID served as a catalyst for virtual solutions such as ours. They demonstrated their efficacy and scalability. Second, healthcare systems are under increasing pressure to improve efficiency and better utilize their scarcest and most expensive resource, their people. And finally, doctor burnout has reached unprecedented levels in the US, and there's been a chronic shortage of staffing in the healthcare profession, both of which have been exacerbated by the pandemic. You have a situation where you've got a reduced population of qualified medical personnel against trying to service a growing and aging patient population. So you've got a tremendous imbalance between supply and demand for patient care. And so the industry is screaming for solutions to help relieve that imbalance. So let me describe how the system works overall. It starts with the natural, unencumbered conversation between a doctor and their patient. We observe that conversation virtually via either a smartphone or Google Glass that we furnish doctors with. And these are single-purpose devices. They can only do one thing, which is access our service. We do that to ensure we comply with HIPAA data security standards. And what this does is it enables a doctor to go about their normal routine of conversing with the patient without having to undertake another task for entering the medical note. We use that conversation as the input for creating the medical note, as opposed to asking the doctor to dictate or type anything on their keyboard. And it's our foundational belief that that is how most doctors want to practice medicine. They are reluctant to adopt technology solutions that inhibit them from having a natural conversation with their patients. And sadly, many solutions today do that. They do restrict their ability to have that natural interaction. We don't think that's the right approach. So the TAM we're after is very large. It's $6 billion. We currently have health systems under contract that represent a TAM of about $1 billion. And we are actually in 5 of the top 10 largest US healthcare systems today. We serve physicians out of 4 countries where we've established substantial recruiting and training infrastructures for our people. So we offer both a real-time synchronous solution and an asynchronous solution in order to appeal to the broadest possible swath of doctors in the US. By offering both types of solutions, we have been able to realize a much higher win rate than when we only had one or the other. And we started the business with the real time, which is really hard to do from a technical and logistical perspective. And we augmented that with our asynchronous solution, which we launched in the middle of 2020. Here's some of the highlights, some wins that we had in 2021 and first quarter of this year. I won't bother reading all of these, but the bottom line of this is that we continue to grow within our existing base of enterprise accounts, and we're adding more large enterprises to our mix of customers. As you may recall from our earnings call on March 21st, our net revenue retention rate increased to 135% in Q4 of 2021 from 108% in the corresponding period of the previous year. And we've continued to grow the base of customers because we've just added 2 very large healthcare enterprises in the first quarter. I want to spend some time discussing the competitive landscape in our business and the various solutions that are being proffered in the industry. The most prevalent outsourced solution is dictation. This was pioneered by a company by Nuance, and the offering there was their Dragon service. It's still very, very popular out there. But as you can see from the y-axis of this graph here, it's at a very low cost compared to the more expensive full service solutions. And the reason for that is that its utility is not as high because the doctor essentially still has to undertake another step other than just interacting with the patient in order to create the medical note. So all it does is replace the keyboard interface with a voice interface, but the doctor still has to interact with technology in order to generate the medical note. So what came about to address this limitation were solutions that relied on the ambient or natural conversation between the doctor and the patient as a source for creating the medical note. So that alleviated the problem of having a doctor undertake another step in order to create the medical note. And we classify these various entrants in this business, in the ambient solution business, based on the level of technological sophistication they might have, and whether they are synchronous or asynchronous. And so today, the prominent player in what we consider to be low-tech ambient solutions is a company called Acuity. And then if we go to synchronous solutions, there is a huge company in our business called Scribe America, a very successful business. They have anywhere between 20,000 and 30,000 doctors under contract. They generate hundreds of millions of dollars in revenue every year. Very successful, well-respected business. The challenge that they have is that their model is in person, and that exposed them to severe limitations during the pandemic when healthcare enterprises undertook some very restrictive safety protocols that inhibited many of the personnel from Scribe America to actually be on-prem to deliver their services. So that brings us to some early stage players that are remote. They're offering their services virtually, unlike Scribe America. But these companies primarily serve or focus on the small independent healthcare practices. And the two most prominent players there are Robin and DeepScribe that we come across. And then there's the enterprise grade remote solutions that have developed automation technology. And there's really, of those, two major companies, Nuance, which just got acquired by Microsoft for $20 billion. They have a service called DAX, which stands for Dragon Ambient Experience. So it relies on the ambient conversation between the doctor and the patient as the input, just like our solutions do. And then there's us, Augmedix. Now, interestingly, and what sets us apart from even DAX is that we are the only one that offers a real-time synchronous solution. That gives us a huge advantage competitively because there are all sorts of benefits that accrue to doctors when you were able to deliver a synchronous or bidirectional communication link to the point of care. You can clarify things that happen that are ambiguous during the interaction between the doctor and the patient, but you can also deliver other services that are critical or viewed critically important by physicians when they go through their various workflows. I want to take a moment to describe our architectural overview of our platform. The areas that you see that are in dark blue are proprietary pieces of software that we've developed. The light blue is technology that we've licensed. In this case, we've licensed automatic speech recognition model from Google. And the way the process works is we take that ambient conversation that occurs between the doctor and the patient. We pass it through the ASR model. It converts that speech into text, into a very long string of text. Now, the challenge with any kind of artificial intelligence is that when dealing with unstructured data, which is what we have at the as output from that ASR, it is very difficult without reams and reams of data, which the industry does not yet have, to create a cogent and accurate and comprehensive medical note at the back end. So what we do is we've developed some interesting technology in the form of natural language processing that identifies the relevant elements within that conversation between the doctor and the patient that has been converted into text. It highlights those things that are relevant to the medical note. And it uploads those into another part of the process, which a tool that we call Note Builder. Now, Note Builder is really cool because what it does is it provides the contextual requirements for the rest of the automation process to work effectively. And it does that by taking each one of those elements that were identified from the NLP and breaks them down into very granular data, metadata. So that metadata is what is the context that Note Builder uses to generate sentences automatically in the medical note. And let me just walk you through what that process looks like. So here's a transcript that's been converted from speech into text. And what you see that's highlighted in blue is the result of our natural language processing algorithm identifying the elements of that conversation that are relevant for the medical note. Then that gets fed into our Note Builder. And Note Builder essentially queries each one of those elements, asks all sorts of detailed questions so that it can establish context for the rest of the process to be able to intelligently understand what is meant by those various elements so that it can then create sentences automatically that are not only grammatically correct, but they're medically accurate and they're placed in the appropriate section of the medical note automatically. Some financial highlights from our performance last year. As you can see, the top line has been growing consistently. quarter over quarter at an accelerating rate. And that poised us quite well to enter 2022. Revenue last year was 22.2 million, I believe. And again, we started this year from a base of accelerating quarter on quarter revenue. As you can see, we achieved that growth without sacrificing gross margin. We did not buy business. So our gross margins continued to increase modestly throughout the year. But in absolute dollar terms, you can see the gross margin increased materially. Interestingly, there's a couple of metrics that we look at very closely when we decide on how to invest our dollars in growing the business. The first is our lifetime value to customer acquisition cost ratio, or LTV to CAC ratio. The industry norm for recurring revenue businesses is typically around 3x. We've been achieving a ratio close to 6x. And as long as we have that kind of return on an investment in terms of how much money we put into sales and marketing, we get that kind of a payback, we're going to continue to invest aggressively in sales and marketing. So that is what we're continuing to do today. And then the other metric that we look at is net revenue retention. That's akin to same-store sales in the retail business. And we see that growing. It reached 135% in the fourth quarter of last year versus 108% in the fourth quarter of 2020. What that means is each one of our customers has been growing consistently. And that's what we want to see. We want to see growth within each one of those enterprises because we have, as I mentioned before, 5 of the top 10 largest U.S. healthcare enterprises under contract. Okay, we've assembled a very strong team. Everybody on this page has a unique set of skills and experience that I felt are vital for any business trying to scale based on a recurring revenue model. We also have a chief medical officer, Davin Lundquist, who was formerly the chief medical innovation officer at Dignity Health, a major healthcare system, who helps guide our product development work and some of our operational infrastructure and processes. But the point of all this is that we have a very strong team. And the team was assembled for one purpose, and that is to build a meaningful and lasting company. So in summary, I just want to conclude by saying that our market is growing rapidly with the help of some healthcare megatrends. We are strongly positioned to win more than our fair share of this growing market because we offer the broadest suite of services in the industry, and we can accommodate the widest range of workflows. We can cover more than 35 specialties, it's more than anybody else, across more than 50 electronic health record systems, more than anybody else, in the widest range of care settings, not just clinical, not just in the hospital, but in all sorts of settings beyond those two. So we have tremendous flexibility and breadth of services that helps us win. We've developed proprietary software to automate the node creation process to ensure our long-term operating efficiency. And then finally, we have an attractive recurring revenue business model. And that's the conclusion of the presentation.
Great. Thanks, Manny, for that overview. I really appreciate that. Let's dive into a few questions here. You mentioned macro tailwinds in the industry. Do you see any of these trends shifting now with COVID becoming more of an endemic? I mean, said differently, how should we think about your solutions in a post-COVID environment?
Well, I don't think it makes any difference. We accommodated the shift, the heavy shift to telemedicine seamlessly because we were agnostic to whatever platform physicians use to undertake a remote visit. But as we go from pandemic to endemic, it's still not going to relieve the chronic staffing shortage that existed in the healthcare industry pre-pandemic. The pandemic just made it much, much worse. But the fact is that healthcare systems are so short of staff that they've had to resort to hiring temporary staff to handle administrative work, and they oftentimes pay them $275 an hour to do that work. Well, it doesn't make any sense to pay someone $275 to do that kind of work when you can outsource it for $30 an hour or less. You know, companies that specialize in these solutions have developed and invested the technology to do it faster, cheaper, and better.
You've talked about recently about Augmedix's journey to a fully automated medical note. Can you talk about when that started, you know, where you are now, where do you think you'll get there?
Well, it started a while ago, basically when I joined the company. It's been a long journey. It's not an easy problem to solve, primarily because of the nature of the data that you're working with. It's highly unstructured because when people have conversations, they are rarely linear and they can go off into all sorts of tangents. So you have to develop an architecture that allows you to accommodate that wide variability. And the way we went about it was, I was just thinking of some of my experiences in other industries, manufacturing, where you have a complex manufacturing process that comprised of many steps. And rather than, you know, I'll use this, you know, crude analogy, auto assembly plant, dumping all of the parts that you need to build a car, and then extraneous parts as well, onto the shop floor, and then asking the robot to assemble the car from those parts based on a picture of what that car looks like. Well, you're going to end up with something that might look like an elephant at the end of that process, right? So what we do is we say, let's segregate those parts into the chassis, into the engine, into this suspension, et cetera, so that what you're asking of the automation technology is much more constrained, much more limited, much easier to model and create accurate output. So we compartmentalize everything to come up with something at the back end of that process that is accurate.
So diving a bit deeper here on notes, can you walk us through the automation versus human involvement with this solution and how we should be thinking about the evolution of these two components over time?
Sure. So notes is an asynchronous solution, which means that you're divorced in terms of delivering the service, you're divorced from the requirement of having a person attached to the customer. So that allows you to make maximum use of technology. And that's what we're doing with notes. We continue to invest in automating increasing amounts of the medical note to the point where we are hopeful in the not too distant future to be able to fully automate that note. Now, to get there, you've got to go through a lot of machine learning. You've got to develop an infrastructure that I described earlier to be able to accommodate that machine learning effectively. And what we've done is we've built over now 500 templates that help us structure the data, that unstructured data that comes in based on specific complaints of a specific patient for a specific physician. And we use those templates to help us with the automation process. And we will continue to build on those templates. We'll keep adding to them and refining them. And through machine learning, what happens is the template for each element might have 10 queries for any specific element within that interaction between the doctor and the patient that it recognizes. Well, through machine learning with more data, those queries get compressed from 10 to 8 to 5 to 3, and ultimately to 1. When it gets to 1, then you don't need any more queries. And so the process becomes even faster. So that's what we're shooting for.
Can you maybe discuss a little bit about how you sell your offerings, how long the sales cycle is, how quickly, you could get people signed on, and, maybe then also walk us through some of your recent key customer wins? Sure.
Well, as a CEO, I will always complain about the sales cycle being too long. But I will say in the 4 years that I've been here that the sales cycle has compressed dramatically. Selling into big enterprises is a long process. Make no mistake about it. And if anybody says anything differently, it's not true. Because the nature of the service is highly intrusive into the workflow. It has to be deeply integrated into the clinician workflow. And then you've got all sorts of IT barriers that you've got to overcome. And you've got to navigate the IT infrastructure and bureaucracy of these large healthcare systems. So that contributes to a lengthy sales cycle. Now, I will say that over the 4 years, what's happened is that the industry no longer needs to be educated on the need for outsourcing this kind of work and the value of a virtual solution. They don't need to do that anymore. So don't spend energy and time doing that. What they're more interested in today is, why are you different from the other 5 or 6 companies that are in this space? And that's where we shine, because as I mentioned before earlier in the presentation, we offer things that our competitors just can't. And the reason for that is we started this business the hard way back in 2013 with a synchronous real-time solution. That is very, very difficult to do, especially if you're trying to comply with HIPAA and you've got dynamic schedules of doctors that keep changing even at the last minute. Very difficult to do in real time.
You mentioned recently, actually, can you provide us for some color, on some of your recent partnerships, most notably Google, ARN, and NCHN?
Sure. So look, the industry is massive. We have a direct sales force of about probably 19 or 20 people today. It was 0 back in 2019. So we built it pretty quickly. But it's not going to be enough. And you don't want to just keep adding people to further penetrate the market. We have a good infrastructure of people to penetrate our existing enterprises. But for new enterprises, we look to channel partners to help not sell the service, but just to generate warm leads for us, at which point the sales team takes over and completes the sale process. So all of these partnerships are designed to do that. ACN is a specific, our ARN, is a specific vertical that deals with a specific specialty. They've got a large network of arthritis rheumatology doctors within their group. So that gives us good exposure to that particular specialty. The National Cooperative of Rural Health Systems is another one that is a collective of a large group, a national group of regional and rural healthcare systems that if you try to market to them directly, it would be inefficient because there's so many of them, they're so scattered. So we rely on this umbrella organization to help us get into those organizations. And then Google, of course, they've got relationships with very large and many healthcare systems, and they have been very effective in helping us get into some of these major systems. So it's a great partnership.
Great. We have time here for a couple more questions. You just raised $40 million when you joined NASDAQ. Can you talk about your path to profitability, what investors should possibly expect, and what does this additional capital do for you?
Well, there's a lot, of course. It helps us continue to grow. And as I mentioned earlier, we're going to continue to invest aggressively in sales and marketing. As long as we get that return that we're getting, it makes no economic sense to slow that down. We're nowhere close to reaching the point of diminishing returns. So we will continue to invest heavily in sales and marketing. We're also continuing to invest heavily in research and development. We are furthering our automation efforts, but we're also developing new products to add to the product suite that we already have, which is very broad already. And what's interesting about these new products that we're working on is that they are fully automated. They will not require any human intervention. So they are pure software products. And as a result, they will be very accretive to our gross margin. So we're really excited about those products that are in our pipeline. And then, of course, being a public company on NASDAQ, it entails, an increase in your G&A for, auditors, for D&O insurance, and so forth. So you've got to reflect that in the amount of capital you need to get to break even. So we don't envision the need to go back into the market anytime soon. We're just going to continue to. The reason why we sized it the way we did is because we planned on not needing any more capital. Things can change. Who knows what the opportunities are in front of us? But for the time being, we really don't have any plans to access capital markets.
Okay, let's wrap this up. Anything that you want to say before we end the discussion? Any topics or anything that's on your mind that we did not cover or discuss, or maybe things investors should be on the lookout for in the coming quarters?
Well, I can't really tip my hand too much. Obviously, that's a nice try, Adam. But so look, we're continuing to execute on our strategy. We have a very clear path of what we want to do over the next 3 years. We look at the biggest player in our space, it's Scribe America. They've been able to assemble a great customer base of 20 to 30,000 doctors in the U.S. Well, we offer a solution that we sincerely believe that is better and less expensive. So for us, we see that as a target, right? If they can do it at that level, we should be able to do that, if not better. So we have our eyes set on that, but it's not just blocking and tackling. It's doing the things that I just described in terms of broadening your product suite, offering, right now we're at the higher end of the spectrum of pricing in the market in terms of the asynchronous and synchronous solutions. Well, there's another segment even lower that we want to penetrate to establish the broadest footprint possible within the industry. And that is what we're working on. That's what we're developing, those low-cost solutions.
Great. Thank you, Manny, for this. And thank you very much for your time today. We greatly appreciate it. To anyone out there that has not already signed up for a one-on-one, again, please send me an email, lowensteiner@lythampartners.com, or again, visit www.lythampartners.com/virtual and click on the one-on-one meeting request button. Thanks again, Manny, and I hope you all enjoy the conference.
Thanks, Adam. So long.
Bye-bye.